So buying new construction today, you can see a lot of advertisements for, lower rates and flex funds and incentives, and it can all get a little bit confusing. So we're going to go into the math on how some of this works and how to get the best deal. So today on Google, if you look up, what the interest rates are on a 30-year fix, they're about 8%, right? As of this morning, we've kind of seen that they trended down under 8%. So that's good news, but that's going to mean that, more buyers are coming in to the market. If you're a buyer right now, you already know that there's not a lot of resale inventory and there's not a lot of motivation for those home sellers to sell if they're locked into rates under 5%. So how do you get a rate closer to 5%? So that's what we're going to show you. So this is your homeowner scenario, right? $340,000 house. Your down payment at 3.5% is 11,900. Closing costs are about 8,500 and an interest rate of 7.5%. I know I showed you that 8%, but that's on a conventional. At 340, you're probably looking at an FHA or VA, so it's probably closer to that number. Your monthly principal and interest is right under 2,300, and the income requirement for that, assuming you have no debt, household income is 99,300. So here's how the math works with discount points from a builder. Okay, so if you are buying this same $340,000 house, right? In the regular scenario, the builder scenario, you're still putting down the same amount and your closing costs come out to about the same. But the interest rate's going to be different. So for Breeze Homes, we've got some homes that are offering 5.99% rates. Keep in mind that it's based on your credit, various factors, and it's based on what the interest rate is today. So that 5.9 was based on a rate at 8%. On a standard rate of 8%, which means that you could potentially get it even lower than that 5.9 rate, closer to like 5.5, 5.7, something like that. But you can see that the monthly P&I changes by more than $300 a month. Even if the price went up by $10,000, right, to 349.9 on this house, you're still going to be saving around $300 a month versus buying the house at the original interest rate. Temporary buydowns became really popular, but you still have to qualify from an income standpoint. When you do the discount points at 30 years, you're qualifying at the lower rate for the entirety of the term. With the temporary buydown like the 2-1, the 3-2-1, they're really cool, they're really convenient for right now. But if you're having a problem qualifying and you don't have the income requirements, you're still stuck. In this case, at 599 versus 75, the income requirement is almost $15,000 less. So where can you use these discount points? So if you're putting a down payment under 10% as a homeowner, the interested party contribution maximum is 3 points. If it's 10 to 24% down, it's 6 points. If it's 25% down, it's 9 points. If it's investment, it can only be 2 points, and then FHA is 6 points. So some of the best deals that we've seen are, through FHA because it's 3.5% down and they can contribute more. Keep in mind, this is outside of what builders have already, basically prepaid for. So prepaid points don't go towards these numbers. The reason I'm showing you this is because if you are looking at a resale, you can essentially use this to your advantage. Now, the use of flex funds can be used to buy your rate down even more. And if you're stacking flex funds with, loan programs like for grants for down payment assistance or down payment, you're going to be able to get a lot more points contributed to buying your rate down. So what are the programs that you can use? So you've got Hometown Heroes. That one comes and goes. You have H2H. You have AmeriDream through Ameris Bank. You have census tract loans. Most of your local lenders have those. And we've seen that basically the benefit is up to $50,000. Now, keep in mind, you have to meet a certain income requirement. So there's almost like a catch-22 based on the price point, where if the price point is too high and the interest rate is too high, you're not going to meet the income requirements on the high end for the census tract grant, and then on the low end to actually qualify for the home. So this is where you can actually combine the programs, get a lower rate, and make sure that that household income stays below the threshold so that you can get that $50,000. Obviously, builder incentives and flex funds, if they're offering $10,000, $15,000, a lot of people are wanting to use that towards closing costs, but the better financial move is going to be to use it towards those discount points, because you're going to save, depending on the size of the loan, you can save anywhere from $200 to $500 a month, or $3,000 to $6,000 a year. So after 3 years, you've already essentially made that flex fund money back. And then, year 27, and on for the next 27 years, it's basically, you don't really look at it like profit, but you're getting more return out of that $15,000 in flex using it towards discount points than you did if you used it towards closing costs. So where do you find these deals? Usually when builders are, processing their inventory, the homes that are almost completed and not sold, or the ones that are completed and sold, are going to have the most incentives. So if you're going into a community, right, you're going to want to ask, hey, what homes, are completed, move-in ready, and are not sold? That's where you're probably going to find the best deals on any inventory. So like with Breeze Homes, we have 2 homes, only 2, even in this market, that come with those lower prepaid discount points and closing costs. So people are getting into these houses as if they were buying in, 2022, right? Because they're under 6% rates and they're getting closing costs. So if you're one of the buyers that's thinking, okay, they're going to, eventually these prices are going to come down. Here's the only problem with that. Most of these builders already have other communities that are coming up. So if they were to reduce the prices versus offering these incentives, right, they're hurting their future appraisal values on these homes. So it's in their benefit to offer it as an incentive versus as a price cut, because everyone is estimating that when these rates come down, there's going to be a flood of buyers coming into the market. If you're taking advantage of these builder programs, you're basically getting ahead of everybody else, getting your lower rate, and securing your house at a better price too. Because if rates do drop below that 6% mark, and everybody thinks it's a 5.5%, is where the target range is, you're going to have a flood of buyers coming in. What's that going to do? It's going to do the same thing it did 2 years ago, where it's going to start driving these prices up. The incentives are going to go away, because that's what we saw 2 and 3 years ago, with this builder inventory. But right now, buyers have an opportunity that are, if they're in the market and they're looking, they have an opportunity to get a lower rate and actually secure a home, versus what happens if interest rates, on the news, they say, hey, interest rates are below 6%, it's going to get crazy again. So take this information, come check out one of the Breeze homes that we have available, hopefully still by the time this video goes live. And if there's anything we can help you with, let us know.